$143.8 billion. Let's just sit with that number for a second.
They almost have to.
That is not the GDP of a small country. That's Apple's revenue in one quarter.
It is a number that, frankly, forces you to recalibrate what you think is possible for a company of this scale. I mean, we are talking about a record for the record books here.
It's almost hard to wrap your head around. Welcome back to The Deep Dive. Today, our mission is to unpack Apple's Q1 2026 earnings report, which just dropped.
On January 29th, yep.
And look, expectations were high going into this. They always are with Apple. But this feels different. The vibe coming out of Cupertino is, well, it's electric.
It really is. We've gone through the transcripts with CEO Tim Cook and CFO Kevin Perrick. We've analyzed the 8K, dug through the 10Q filing. The headline is, that revenue is up 16% year over year.
Which is already huge.
But the vibe isn't just about the money piling up. It's about how they did it.
Right, because 16% growth for a company this massive is usually, it's almost mathematically impossible. You expect single digits, maybe low double digits, they have a blowout. But 16%.
Exactly. And they didn't just beat on revenue. They crushed earnings per share EPS, which came in at an all-time record of $2.84.
Wow.
That's up 19%. So they aren't just selling more stuff, they're becoming significantly more profitable while doing it.
And that's what we need to figure out today. How does a mature giant suddenly start sprinting like a startup? We're going to break this down into three main pillars. First, the super cycle demand for the iPhone 17, especially the shock coming out of China.
Oh, for sure.
Yeah.
And second, the services machine and the margins that are honestly kind of baffling.
And third, and this is maybe the most significant one for the next decade, we have to talk about AI.
Oh, yeah.
Because tucked inside this report is a major strategic update involving a partnership with Google that really changes the chessboard.
That Google situation is a plot twist I did not see coming.
Me neither. But we also have to look at the hidden headaches, supply chains, and rising memory costs that might be lurking around the corner. But let's start with the star of the show, the iPhone.
The engine of the ship.
The engine is revving high. iPhone revenue alone was $85.3 billion.
Just
the phone. Up to 23% compared to last year. 23% growth for a product that critics have been calling mature or boring for, 5 years now?
And Tim Cook called the demand staggering. So what is actually driving this? Is the iPhone 17 really that different?
That's the question.
It seems to be a perfect storm of hardware hitting the right notes at the right time. You have the iPhone 17 Pro and Max, which are, doing the heavy lifting on performance, better cameras, better battery, the usual upgrades.
Sure.
But what stands out in the transcript, and what's arguably driving the cool factor, is the mention of the iPhone Air.
The Air. Yes, I've seen this.
Yeah.
That's the ultra slim model.
Precisely. It's the slimmest design they've ever done. And what's fascinating here is the psychological shift. Apple has realized that after years of phones getting thicker and heavier...
For batteries and giant camera bumps.
Exactly. There is a massive segment of the market that just wants something sleek.
It's less of a utility tool and more like a piece of jewelry again.
That's a great way to put it.
I remember when phones used to compete on being small and light. It feels like we are circling back to that.
We are. The iPhone Air packs powerful capabilities, but the selling point is the form factor. It feels radically new in your hand. And the customer satisfaction numbers back that up. 99% satisfaction for the iPhone 17 family.
99%. That is absurdly high, even for Apple.
Usually you see high 90s, but 99% implies almost nobody is unhappy with the purchase.
And that satisfaction is translating directly into what we call a supercycle.
Right. A supercycle is when you have a massive chunk of your user base upgrading all at once. This isn't just people replacing a broken phone because they have to.
This is people wanting the new device.
And nowhere is that more apparent, and frankly, more shocking than in Greater China.
Okay, let's stop here and really dig in, because this is where the narrative completely flips.
It really is.
For the last year, all we've heard is China is tough, local competition is killing the iPhone, Huawei is back.
Yeah, the doom and gloom was thick.
It felt like the market had written Apple off in that region. And then they dropped this report. Revenue in Greater China is up 38% year over year.
38%. It is a geographic shock. It completely contradicts the typical market fears we've been seeing.
How do you even process that number?
But put that into context. Growing nearly 40% in a saturated, highly competitive market like China is almost unheard of for a foreign brand right now.
So how did they do it? Was it just price cuts? Or is the demand genuinely that organic?
It's organic, and that's the key. Tim Cook mentioned that store traffic in China was up double digits.
Okay.
But here's the stat that really matters. They had record upgraders, which you'd sort of expect during a launch.
Yeah.
But they also saw double-digit growth in switchers.
Switchers, meaning people ditching Android to come to iPhone.
Yes. In a market where Huawei and Xiaomi are aggressively pushing national pride marketing and high-end foldables,
Right.
for Apple to be pulling people away from Android at a double-digit growth rate,
Yeah.
that signals that the brand prestige and the appeal of the iPhone 17 lineup are they're resonating deeply.
So it's not just holding ground, it's taking territory.
Taking territory, that's exactly right.
That is wild. It totally upends the idea that they were losing their grip there. And it's not just China, right? I saw India mentioned as well.
India is the long game, but the scoreboard is starting to light up.
Yeah.
They saw double-digit revenue growth there, setting records across the board: iPhone, Mac, iPad.
And they opened a new store.
Their 5th store in December, and they're planning another for Mumbai soon.
But India is still a relatively small piece of the pie compared to China or the US, isn't it?
In raw dollars, yes. But looking at the growth trajectory, it's vital. The key metric for India isn't just revenue, is who is buying. The majority of buyers for Mac, iPad, and Watch in India are new to the product.
So it's pure ecosystem expansion.
Exactly. If you get a customer in Mumbai on an iPhone or an iPad now, history suggests you have a customer for the next 10 years. You're building the foundation for the 2030s.
So the hardware is flying off the shelves. Let's pivot to the software, specifically the brains inside it. We have to talk about AI. For a long time, the knock on Apple was that they were behind. They were too quiet. Where is Apple's answer to GPT was the headline every week.
Yeah, that was the big question mark.
And now we get this headline news in the earnings call. Apple is collaborating with Google.
This is the strategic pivot of the quarter. Tim Cook explicitly confirmed they are collaborating with Google to develop next-generation Apple Foundation models, or AFM.
To power a personalized Siri coming later this year. Okay, wait, let's pause on foundation models. For the listeners who aren't machine learning engineers, what exactly are we talking about here?
Think of a foundation model as the base layer of intelligence.
Yeah.
It's the massive brain that has read the entire internet. It understands language, logic, context.
Right.
Building these models takes an astronomical amount of data and computing power. It is an infrastructure play as much as a software play.
And Apple, the company that likes to own every single widget and line of code, the company famous for not invented here,
Yeah.
is effectively saying we're going to use Google's help for this.
It is a pragmatic move, and if we connect this to the bigger picture, it shows Apple prioritizing user experience over pride. They are blending their own silicon advantage, the chips on the device, with Google's massive capability in training these large models.
And Cook called it a collaboration, not just licensing.
Right, that's a deeper partnership.
But how does that work with privacy? I mean, Apple's whole brand is what happens on your iPhone stays on your iPhone. Google's business model is, well, it's built on knowing exactly what you're doing so they can show you ads.
That is the multi-billion-dollar question. And Cook addressed this by doubling down on their infrastructure strategy. It's a hybrid approach.
You mean private cloud compute and on-device processing?
Exactly.
So break that down. Private cloud compute.
So for lighter tasks like summarizing a text or checking your calendar, your phone handles it locally. It never leaves the device.
Okay, that makes sense.
But for heavy lifting like generating a complex image, it goes to the cloud. But specifically, it goes to Apple's private cloud compute.
Meaning Apple servers running Apple Silicon.
Correct. And they claim this architecture maintains industry-leading privacy standards. The data isn't stored, it isn't accessible to Apple, and critically, it supposedly isn't accessible to Google either, even if Google's models are helping run the logic.
It's a bold promise. It's like we're using Google Smarts but keeping them blindfolded.
That's the pitch, and it seems like a necessary compromise to get a personalized Siri out the door that is actually competitive, because right now, consumers are demanding these features.
And are they actually using them? I mean, we hear about AI all the time, but are people actually touching the buttons?
According to Cook, yes. He said the majority of users on enabled iPhones are actively using Apple Intelligence features.
Majority is a strong word. I would have guessed early adopters only.
It is significant adoption. And they aren't just using it to write emails. He highlighted visual intelligence, using the camera to search for things you see in the real world.
Like pointing your phone at a restaurant and getting the menu overlaid on the screen.
Exactly that. It feels like the augmented reality dream we've been promised for years, just without the clunky glasses.
Right. And I saw mention of live translation on the AirPods Pro 3. That feels like science fiction finally arriving.
It's the Babelfish concept.
So if I'm in Tokyo and I don't speak Japanese, the AirPods just whisper the English into my ear.
That's the idea. And think about the lock-in effect of that. That transforms the AirPods from just a listening device into a critical communication tool.
You're not switching to another brand of headphones if you rely on that for business travel.
No way. And speaking of business, it's not just us regular folks using this stuff. Their report mentions some massive enterprise buy-in.
This isn't just about cool consumer tricks.
Yeah, this validates the whole AI PC narrative. AstraZeneca is rolling out 5,000 M5 iPad Pros specifically for their sales teams to use AI.
And Snowflake is deploying 9,000 Macs as primary laptops. Why does that matter? Companies buy laptops all the time.
It matters because they are explicitly buying them for the AI capability.
Yeah.
They see the M5 chip and the Neural Engine as tools for productivity.
It moves the device from being an expense to an investment in efficiency.
Exactly. They aren't just replacing old laptops, they are deploying AI endpoints.
So hardware is booming, AI is accelerating with a little help from Google. Now let's talk about the cash cow that keeps on giving. Services.
The services juggernaut. Revenue hit an all-time record of $30 billion.
$30 billion.
Up 14% year over year. To give you a sense of scale, the services division of Apple alone is roughly the size of a Fortune 50 company.
That is mind-blowing. In 3 months. Just from subscriptions, apps, and payments, what's driving that?
It's broad-based. Advertising, cloud, music, payment services, they all hit records. But the engine driving this is the install base. Apple now has over 2.5 billion active devices in the wild.
2.5 billion. That's a lot of pockets to reach into. That's almost a third of the planet's population owning an Apple device.
It is a massive captive audience. Every time they add a service, they have 2.5 billion potential customers, and they are getting better at monetizing that base.
Like with content. Apple TV Plus pain.
Viewership was up 36% in December.
And I have to mention this because I literally cheered when I read it. Ted Lasso is coming back. Season 4 confirmed for this summer.
It's a smart move. You need those cultural anchors to keep people subscribed. They also mentioned Cape Fear with Scorsese and Spielberg. That F1 movie with Brad Pitt got an Oscar nomination.
They're becoming a serious prestige media player.
They are. And all of this flows into the margins, right? Because selling a subscription is a lot more profitable than shipping a phone around the world.
Here's where it gets really interesting for the finance nerds. The company gross margin is 48.2%. That is up from 46.9% a year ago.
Hold on. For a hardware company, nearly 50% gross margin is, well, it's astronomical.
It is. Usually hardware margins are razor thin, like 10 or 20%.
Exactly. It's operational wizardry.
Yeah.
CFO Kevin Perek explained it as a favorable mix. People aren't buying the cheap iPhones, they're buying the Pro and the Max.
Which have higher margins.
And you layer on the services growth. Services has a gross margin of 76.5%.
76.5%. That is basically pure profit.
It costs them almost nothing to serve the next subscriber. So even if hardware costs go up a bit, the services growth acts as this massive counterweight that lifts the whole company's profitability.
And they did this despite absorbing, what was it?
About $1.4 billion in tariff impacts during the quarter.
Wait, $1.4 billion in tariffs. And they still hit record margins.
It speaks to their pricing power and supply chain management. But, and there's always a but, it's not all perfect. We do have to talk about the headwinds.
Right. Let's take off the rose-colored glasses. Let's talk about the Mac. Revenue is actually down 7% to $8.4 billion. Is the Mac in trouble?
No, I don't think so.
Yeah.
This is what we call a tough comp, a difficult comparison. You have to remember, in the December quarter of last year, fiscal 2025, Apple had just launched the M4 MacBook Pro.
So they had a huge influx of sales from a new launch in that specific quarter.
Exactly. So they were comparing a launch quarter last year to a non-launch quarter this year. The timing of the release dates creates a distortion.
So the underlying health is still good?
The install base for Mac is at an all-time high, and half the people buying Macs are new to the platform. The bigger concern arguably is on the supply chain side.
Yeah, Tim Cook used the phrase supply constrained. That is usually code for we could have sold more if we could have built them.
For sure. He specifically mentioned they are constrained on advanced nodes.
Translate that for is advanced nodes.
We're talking about the manufacturing process for the chips, the 3-nanometer technology. These are incredibly difficult to manufacture. They're used in the high-end iPhone 17 Pros and the M5 Max. Apple simply cannot get enough of them to meet this staggering demand.
So if you're trying to buy an iPhone 17 Pro right now, you might be waiting a while.
You might be. And for the March quarter Q2, Apple is baking those constraints into their guidance.
So growth will be capped by how many chips they can get their hands on.
That's right. And then there's memory. I saw a note about memory costs rising.
The other shoe dropping.
Yep. Management explicitly warned that memory prices NAND flash for storage and DRAM for speed are rising significantly.
So the cost of the raw ingredients is going up.
Drastically. It didn't hurt them much in Q1 because they probably had long-term contracts locked in at lower prices. But those contracts expire.
And they warned it will pressure margins in Q2.
They're looking at a range of options to handle this. Could be pricing levers, making things more expensive, or using their massive cash pile to secure new long-term agreements.
And one more dip: wearables. Down 2%. Is the Apple Watch losing steam? Similar to the Mac, this looks like a supply issue. They specifically mentioned constraints on the AirPods Pro 3. The demand was there, people want the translation features, but the stock wasn't.
So they couldn't fulfill the orders before the quarter ended.
Exactly.
Okay, so let's zoom out and recap. We have a company making $143 billion in 3 months.
Which is just nuts.
The iPhone is back in a massive way, defying gravity in China. Services are printing money with 76% margins, and they're partnering with Google to fast-track their AI.
That's the summary. Apple is massive, growing fast at 16% and pivoting successfully to AI. They are managing an ecosystem of 2.5 billion devices. It's a fortress.
So what does this mean for you, the listener? Why should you care about Kevon Parek's margin analysis?
Well, if you're a consumer, it signals that the premium electronics market is incredibly healthy. But the so what here is really about the supply chain.
Right.
If Apple, the company with the best supply chain in the world, is saying chips are tight and memory is getting expensive, that is going to ripple across the entire tech industry. So expect prices for all electronics, not just Apple's, to stay firm or even rise.
Exactly. And if you want that new Pro iPhone, maybe order it sooner rather than later.
You know, I have a final thought on this Google partnership. It's been bugging me in a good way. With Apple sitting on $145 billion in net cash of $54 billion, and yet they are choosing to partner with Google for these foundational AI models, are we seeing the end of the walled garden era of development?
That is the provocative question, isn't it? For decades, Apple's philosophy was we build the whole widget.
That whole thing.
But AI training requires such a massive scale of data and compute that even Apple might be realizing they can't go it alone, or at least not fast enough.
Right. Is this a permanent shift where the tech giants become more interdependent, or is this just a pragmatic stopgap until Apple's own models catch up?
I suspect it's the latter, a bridge to their own independence. But for now, the walls of the garden definitely have a Google-shaped door in them.
A Google-shaped door. And I like that image. Well, that's all we have time for today. Go stream Ted Lasso when it comes back. Keep an eye on those memory prices, and we will catch you on the next deep dive.
Thanks for listening.